Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 28th. Michael Boutros with you on the line. Great to see you guys in the room. Jay, Pete, Peter, Pooja's in the house, Steve's in the house. Great to see you guys this morning. So FOMC is on tap tomorrow. We got the BOE on tap on Thursday. Dollars crawling higher still. Markets with a little bit of a rebound today. You're seeing that equities in the U.S. are opened or set at least to open in the black here after a big tumble yesterday. I don't think we're quite out of the woods just yet as far as the risk-off move that we've been seeing, but we'll keep an eye on that throughout the day. On the menu, DXY, Euro, Sterling, dollar Swiss with a move higher, Aussie into support. Crude, take a look at those levels. Dollar CAD into resistance, still pressing just above resistance. So I'm kind of split on the dollar CAD position. We'll take a look at that in a moment. And then we'll hit gold, dollar, yen, and Kiwi. Any other questions or trade setups you guys want to review? As always, throw them on the message board at any point. Good morning, Patrick. Good to see you in the room, sir. More divergence on euro, still waiting, says Pooja. 109.95. That's my level. Yeah, maybe even a tad deeper, Pooja, but that's my region. Yeah, we'll take a look at that in a moment. First things first, let's just take a quick look at the DXY. Look, it's in breakout mode. I told you guys my level was 97.87. That's derived from the weekly chart that we've been looking at here, that long dated 618 from the drop off the 2016-17 highs. Huge pivot. Now, on a weekly basis, we still do need a close, okay, to validate sort of the breakout. But intra-week, we're there. Here's that momentum trigger that we've been watching, an RSI. Okay, we're right there. Let me just get rid of this. So it's interesting that we're coming into a region like this on FOMC into the close of the month. Big factors taken into account. Here's what DXY looks like on the daily chart. So if we are breaking that near-term downtrend or that near-term slope off the highs from last year, 97.87 was the barrier to watch. We popped through that and closed above yesterday on a daily basis. The next level comes up at the December open. That's at like 98.30, another 27 odd pips to the upside. If you take a basic parallel off the lows from this year, okay, extended off the high that we made in January, basically puts you in the next 2 days on convergence with that December open at 98.30. So on a spike tomorrow, on a rally, on a rip, on a reaction high, if dollar reaches, look for a reaction there. Here's what it looks like on the intraday. Even the slope we were following here has the parallel just higher. You see this? Same slope, guys. I haven't changed anything on this. It's the same one that we've been following from late December into January. There's that extension right off the parallel. I think that's a 138.2. Okay, so Fibonacci ratio right off the high, caught the high. Gives you a little bit more room. There's the December high, 98.30. So some levels to watch, levels of interest on the upside for exhaustion. If you're holding longs on the dollar, those are the levels you want to start shaving some off. If you're looking for an exhaustion or a fade position, I'd be cautious, okay? A breach of upslope resistance may rip. So just be very careful. What I do like about it is that if we're wrong, if it spikes, for example, into 98.30 or into that parallel, pulls back, you take the short, or you try to fade it, you'll know if you're wrong pretty quick, because if it rips through, it's just gonna run. So there's room to the upside. That being said, caution is the name of the game here. You don't want to get too overzealous on this. It's a pretty strong move to the upside. Just looking for some exhaustion here on the near term. If you take a broader retracement, just to remind everyone, from the high, all right, that's 618. Comes in at 98.40. So you can even put that zone sort of right there as your key resistance zone. In fact, let me put that here too. So that zone right there. All right. Questions, comments, concerns? Actually, that retracement is already there. I just got to bring it up. All right, so Euro number 2, excuse me. Here's what euro looks like, Pooja. Eman says, morning, Michael, continuously late from my no worries, man. Great seeing the room as always. Um, here's euro. So on the weekly chart, Eman, can we have a look at euro Swiss, please? Sure. You know my feelings on the grandpa trade, but I will definitely take a look for you, man. I got you. Here's the zone on the weekly chart for euro. You guys have all seen this before. It's 618 from the advance off last year's low. The low week close reversal from last year comes in at 109.76. 110.16 is the 618. So we're in this zone right now. You also have the former swing lows from November of last year where we rebounded. So a nice sort of weekly zone of interest of support. Keep your eye on this into the close of the week. Daily chart looks like this. There's that 618, 109.94. I'm sorry, it's the 618 of this drop. This brings it up. If you take it to the high to where we are right now, that's what you're looking at on the intraday, or on the weekly chart rather. I'm going to leave it the way it is right now, just for a frame of reference. And the 100% extension, this is what's the decline off the high that we made back in October, actually nailed the low. Okay, the low for November. So a nice little zone there of support. One of the other reasons, or the bigger reason that I like that zone, is on the intraday. The only thing I want to note here, excuse me, Pooja, is this slope. Okay, it's only a 2-point touch, and this is only a parallel. It's giving us a couple of touches here. But if a break of a downslope is materializing, you might see this accelerate. So this would be the only area I'd want to see some support, or at least try to find a little bit of a rebound. Here's what it looks like on the intraday. Okay, so the slope we've been following off the highs, that pitchfork, it's been pretty clean. It's been pretty clean. Here's the median line break, lower parallel, low week reversal close 109.76. Okay, same thing you looked at right there. That's the bottom end of the zone. So maybe a little bit deeper, Pooja, than 109.95 if you get it. But generally speaking, it's this 20 pip region of support that I'm looking for a reaction here in euro. Questions? Fed's on tap tomorrow. No changes expected. Obviously, we're going to be looking for the commentary from Jerome Powell as far as that's concerned, with any clues there. BOE is expectations for a cut, interestingly enough, are continuing to mount. The last time I looked, it was like 60%. So it'll be interesting to see how the BOE materializes. That's on Thursday morning. We'll be doing our webinar there right after. Speaking of, here's what pound looks like. So no change to any of the euro levels. Here's what we looked like yesterday on the sterling. We're at support like right now. So as I said yesterday in the piece, we're basically looking for like 130.42 or this zone right here into the lower parallel for downside exhaustion. 130.20s. We're basically there now. 30.17. 29.90 is still the level is the line in the sand, guys. It's beneath 29.90. I do not even want to consider long side exposure on sterling. I think anything sub 29.90, you're looking for that drop towards the 29 handle. 38.2 gives you 29.20. That's sort of your key zone if this breaks. So again, one of those trades where you're coming up on a hard level, look for a reaction here today. Here's what it looks like on the intraday chart. Is this going to be just another wick low like we've been getting here, like we got here? Is this just another one? Note that on all these declines that look like it was breaking pitchfork support or even basic slope support on a closed basis, did nothing. Did nothing. So I'm interested to see how sterling closes today. I'm, ideal scenario, you find support basically here. Anything sub 29.90, move on. And we'll play it from there as we get into the U.S. trade session. I would like to see this thing hold. Okay, thanks. We'll exit manually as long as I'm on the screen. Also, a trailer on the stop. Okay, perfect, Pooja. On that euro position, yeah, I really want to see a little bit more of a drawdown, a washout before a bigger rebound. That's my take. I've also been involved in dollar CAD. I want to, let's jump to dollar CAD next, just because I think that's the one that's pending for me as far as like entries right now. Here's any questions on sterling. Look for support here. As far as resistance, I see your question there. I'm not ignoring it. It's right here. I mean, this is the first level I'd look at. Weekly open resistance comes in. Um, excuse me, right around 3080, 3079. Okay, that's where we opened the week. So if this does hold support, that's your first target, and a breach above the weekly open, I think would give you leverage or leeway for the move higher. Just remember, guys, where we turned in sterling, you guys know we've been like really bullish, right? We've loved the long side of sterling for a while now. The reversal we made last week, we need to be cognizant of, okay? Because it came at a huge level. I tell you guys this every time I see one: 100% extension off the low, 618 retracement off the high. Such massive inflections off these levels. So the fact that the price did this is what had us looking lower. Now, these are the two levels we were looking for support. Let's see if we get support. Anything beyond this, you're risking 29. I think that's the bigger structure we would need to pay attention to. Okay, dollar CAD. So here's what Loonie looks like. Now I'm not gonna lie to you guys. I just got stopped out of this overnight. I had to stop against the high. It might have been too tight. And then we just grazed it right now. I still think we need to watch this with interest. Here's what it looks like on the 20th. This was on Monday, right? Right into the Sunday open, actually. Right ahead of the open, we were talking about 131.84, 131.82, big zone of resistance. You got slope resistance there. Again, a 618 retracement off the high, a 100% extension off the low. My favorite pivot zones. So you saw that we had slope there, upslope resistance, downslope resistance, Fibonacci resistance, the works. We made a spike, pulled back. It was a tight stop against the high, 15 pips, not a big deal. Sat in all night. Here it is. Just stop me out, pulling back. Now, here's the thing. The breakout, if this is a legit breakout, it should see acceleration. If this is going to break out and kind of crawl higher here, I'd still be inclined to fade it, actually. Also note that on the last three highs, you're marking divergence in momentum. Both of these reference points above 30, so it's a weak reference point, but this last one below 30, as price action made a higher high. And again, always looking at this from a close basis, right? So the hallmark of exhaustion is still there. You're starting to wick off a little bit. I don't have a clear-cut signal necessarily to take the trade just yet. But if we buckle back below 3180, I think it's a good sign. If this holds, U.S. markets come online in a little under an hour here. If it comes and we hold this support, your next level is 32.47. It's pointless to try to fight it. December open comes in at 32.70. Those are your next top two targets. So a little bit of an adjustment to the slope here, just kind of cleaned up some of the angles, but still same levels are in focus. Okay, we're trading here right now. If there's going to be failure on dollar CAD rally, this is where I would like to see it come. Let's just say that. Look for a move back below 3180 to get it started. If we continue to hold here into the open, this thing's is got more upper room. Here's the weekly open. All right, questions on dollar CAD? Yeah, long wick would be nice, wouldn't it? Oh, yeah, I'm with you on that one, Pooja. Okay, so that's dollar CAD. I just want to take a quick segue there and look at that as that's on the move. We'll see how we look as we head into the U.S. trade session today. Dollar Swiss, kind of an undercover trade that we've just been following, but it's continued to hold this formation really well. Here's what it looked like yesterday. Okay, on this one, it's looked like it was just setting up a weekly opening range below resistance. Here's the breach. Here's 97.27. Next level up to complete 100 off the low would be 97.47. Now on slope, it doesn't come till later, so I don't want to necessarily stress this slope because we don't have too many inflections on it. That's still a lateral level I'd be keeping in focus. Actually, you know what? Let me see what this looks like. Hold on one sec. Yeah. Okay. Let's amend these levels real quick. Okay. That's like your secondary target. I'm not looking up that high right now. On this advance, 97.40 would be the better wave count than using this first initial leg. So the January 16th low, the 22nd high, and the subsequent low you made on the 23rd gives you a 618 extension at 97.40, okay? And that converges on slope pretty nicely on the median line. These are our first two targets. I think what did we cite? 97.27, which is what we're testing now, 97.47. So just bring that down 7 pips. 97.40 would be the 618 I'd be more inclined to pay attention to here on the extension. But in any event, for Swissy, here's what it looks like. Okay, there's that median line. Here's the daily chart. Nothing's changed on this. Same levels. And again, I see a couple new names in here today. Good to see you guys in the room. Reminder, you can always see, if you don't see the daily and the weekly chart presented on that report, it's only one click away. So I alternate every other report on that asset. One will have the daily and weekly, one will have just the intraday, and vice versa. So it's the same slope. Came off of slope support. We wicked off that high. Okay, that's that wick. We pulled back right into support. It held. And here's the secondary attempt. Okay, so long story short, looking for a move here in Swissy to clear things out. So if we move higher, the level to watch is still going to be that zone just above that 618 extension, 97.40, where the median line is. Any strength beyond here, you're basically looking for sort of a breakout towards the weekly, the yearly, monthly, yearly opening range highs. You're looking for 97.71. You're looking for 97.85. Not the base case scenario. Let's just say that, not the base case scenario. Okay, but feel free to take a snapshot of this chart, guys, just for the updated levels. Let me just stretch it out for you. On dollar Swiss. All right, that is number 5, and Aussie, number 6. So Aussie I have at a, okay, at pretty big support. So you guys remember this setup? Here's what it looked like last night. Well, let me start you off on the, I guess on the weekly. For Aussie on the weekly, very precarious situation, okay? Basic slope resistance, what I'm looking at right now, it's a 3-point touch, give you a 4th there. If we materialize that, we're basically there right now. What I wanted to note is on the weekly close this week, this is last year's low week reversal close. And then you have last week year's low close in general, which is right here. Do you guys see it? It's kind of a, let me get this for you. Okay, the easy way to do it is actually just to bring it into a line chart, and it'll be right there, the low close, but you get the picture. So the low close comes in at 67.33. Just a frame of reference, that's a multi-year low close. And again, converging on slope, basic resistance off the highs we made of June of last year. So something to take note of as far as possible support for Aussie. Okay, daily chart looks like this. So the break of the upslope that we were following, that's exactly what you want to see, right? If it's a real break, it's exactly what you want to see, an accelerated drop. First major support barrier that we talked about last week, 67.45, 67.50, that's where we're trading now. Not only are we trading there now, you're getting a little bit of a recoil off that level. Now, the level we just eyed, the low close at 67.33, that's just lower. I want to show you where it comes up here. Okay. But even without that slope, this slope in red is just a parallel of the same pitchfork we've been in all the way back from the highs in 2017. Okay, same levels. That red line is just a parallel. Converges on the same region right now. Right now. So it's make or break for Aussie. Anything sub 67.30, what do we say? 67.33. You're looking for just straight up resumption of the broader downtrend. You're breaking downtrend support. Always just best to kind of take it back to basics. So it's do or die. Momentum's in oversold. That's not going to make me want to buy this or sell this at this point, right? Because this is the last time we saw a dribble down here. You can get a wash. This is the ideal scenario. You sit on support like we are right now. Someone washes this out. FOMC, someone says something stupid, Jerome hiccups or something, I don't know, and market washes out. Then you get a broader rebound. The lows are maintained on every test subsequent, and you get a bigger bounce. We'll play it from there. But at the end of the day, anything sub 67.33, guys, you're treading on real dangerous territory. Here's what it looks like, especially with momentum and oversold. The momentum's on the side of the bears right now. Here's what it looks like on the intraday. So basic slope, basic channel off the highs. I've adjusted this a little bit, so you might see this a little bit different from what it looked like. Actually, no, this is the same level. Sorry about that. Channel support converges just lower. There's the September open, 67.24. And the lower parallel comes in just lower, just beyond that. So that's sort of a region, again, 67.24, remember 67.33 is the level that we just eyed. Actually, I could probably just eye that here and drop that. Also note that 67.50, which is what we have as support, what we highlighted as support yesterday, that completes 2 equal legs off the high. So even if the whole drop is corrective, you're still in bounds, as it were, while above 67.33. All right, might be the same kind of setup that we're looking at with dollar CAD sitting there at resistance for a while before it turns. Big inflection zones, guys, on both of these. Let's see what happens today. See what happens today. Any questions on dollar CAD? All right, let's hit dollar yen and Kiwi, and then we'll hit gold and crude real quick. Here's dollar yen. This will be number 7. So dollar yen with a big gap to the downside into the open and just ranging ever since. Here's what dollar yen looks like, or here are the levels that we've been following. Oh, here we go. This is what we look like heading to the close of last week on the 23rd. Bounce that did hold support. Guess where we found resistance? Right at the yearly open, just ahead of. We closed at support, right back at this level, at the convergence of the lower parallel, mind you. And that's exactly where this thing just completely plummeted right into the open, gap lower. That's now resistance, same level. Okay, that level's 109.28, 109.25. That would, put you back in bounds, at least on the long side of dollar yen. Below that, you're still at risk. You broke downtrend support. You broke uptrend median line support. You're still at risk while below this region. Okay. Now, even if the market wants to fill the gap, guess where the close of the week was last week? In that region, right? So there's a lot to look at there. If we make a spike, look for a reaction to 109.20, basically 109.30. I'm not messing with this thing, guys. Just again, my humble opinion. If you put a knife to my head, I guess if you put a gun to my head, if it were to spike into 109.30 and fail, might be a decent position. But look, on the daily chart, here's what this thing looks like. Huge region, right? We talked about this yesterday. If it fills the gap and that holds, you're still at risk for a move down to 108.65, 108.62. That's the yearly open slope support. 618 retracement. I mean, we could keep going, right? So that's, let me put it this way. If this drop had materialized into here and we were getting this action, I'd be all over it, right? But the fact that I don't really have a key level there, I don't really have a region of where this is, supposed to be finding meaningful support. So I'll kind of let this one range. If we get into 109.30, we'll be looking for exhaustion. The downside move, you're looking for 108.65, 108.62 for a reaction there in dollar yen. So I just wanted to give you the levels. I don't really think there's an imminent play here. I mean, the weekly range alone is only 30 pips. So it's not much to get excited about. All right, that's dollar yen. Kiwi, number 8. So New Zealand dollar, I have a break of support and some new slope. This is the one I added some slope onto. I kept on saying for the wrong setups. Kiwi. So here's the daily chart. What was our last Kiwi update? Right here. Okay. So daily chart looked like this, right? We were 65.88. Remember that level we talked about forever? We made like 4 different tests of it, gapped lower into the open yesterday, right? Break lower and a close right at the 38.2 retracement. So not only did we break that slope, see the highlighted region right there? We closed below it and we closed at the 38.2 retracement. So this, if you recall, was sort of our line in the sand. Anything beyond this, you're basically looking for a validated break of the upslope, and that seems to be what we've gotten here. For me, Kiwi's no play here as far as trying to chase this lower. If you're holding shorts, my objective on this one is 64.87, 64.94, just below the 65 handle. You got that 100% extension, which would give you 2 equal legs off the high. You got former swing lows from back here. This is the close low in June. Really nice pivot back on the August drop. Breakout zone back in the December rally. Converges on a basic parallel over the next few days. Okay, so that being said, what do you do if you're looking for new positioning on Kiwi? There's not much, guys. I mean, again, a pistol to my head, I think it moves lower, but what are you gonna do? You're gonna short it down here? Against what stop? Against what stop? At the same time, you're sitting mid-range of what our next target is, which is 64.94 and 64.80 down here. So take it for what it's worth. Kiwi, the breakdown seems, again, it's a big level, and if it's legit, you got further down to go. Okay, you got further down to go. Monthly or weekly open resistance is now what I'll use as near-term bearish invalidation. So 65.82, that's where we opened the week. This is last week's open. Let me drop that. And you could drop that 38 too. So these are the ones I'd work with. These are the current sort of operable levels I'd be working with right now. See what this parallel looks like. Okay. What if it and it rallies towards 65? So if it rallies back towards 66, excuse me, 65.60, look, any stops you take, this is just my humble opinion, any stops I would take on if I wanted to short this, let's say we rally back towards former slope support, and that serves as resistance. Any stops you take, ideally against the weekly opening range high or Friday's close, but just as a rule of thumb against the weekly open. If you get back through the weekly open, on a break like this, you're probably looking at a false break scenario. So it's going to depend on your risk tolerance. If we get back to 65, 60 and you're comfortable putting a stop against 65.82, go for it. If you're comfortable putting against the stop there and you're open for a little bit bigger of a, basically looking at 1-to-1 at that point, if you're looking for the extension towards 64.80, but it's going to be based on your risk tolerance at that point. For me personally, I don't have anything here to get me in. If we rally towards 65.60, I'd want to see what the momentum profile looks like as we get up there. 65.10, Pooja's noting, is the 200-day moving average. Love it. Love it. Maybe you get a bounce there. I still want to see a deeper cut, Pooja. You know me in moving averages. I still want to see a deeper cut just because the magnitude of the break there, I think, should have gotten us a bigger move than that. In any event, it's either a push higher first and then that final drop, or if we get a 65 tag, look for possible downside exhaustion there. That is New Zealand dollar. Last but not least, the commodities. Gold looks like this. Guess what level held, guys? 1586, same zone we've been talking about for months. This is 618 retracement from the decline off the record highs that we made. Eman says I'm short off 1580. Like it, 1579. Don't get overzealous on it because you're playing counter trend. I'm always telling you guys that, but man, that's like, here's it. Here's the chart, guys. I don't even need to say anything. Here's the chart. So even if you were working with this slope, with this ascending sort of channel formation, look at the pivots you got off it. Here's the 60-minute. I mean, sometimes I just jump into the charts and marvel at how price action plays these slopes. All right, basic channel, resistance 3 tags, breach, instant support. But guess what? Lateral resistance 1586 held. Once we pivoted back that slope, boom. Look for resistance ahead of 1582 if this is going to hold. Weekly open support comes in right here, which is exactly where we just pivoted. Okay, so just know that that's the weekly open support. And as I noted in the piece, 1586, 1568, that's last week's opening range high, or the previous week's opening range high, to be honest with you. But that would necessitate a break of this week's opening range lows and would be an objective bearish signal if you get it. So all I want to say, Eman, is that I like the short that you're at, but watch these support structures like right here, because right now we're still in the weekly opening range. We need that break of the weekly opening range lows to kind of validate at least a near-term downtrend, because all this is a rally or a uptrend hitting resistance, right? So we want to know how to treat that. Uptrend hitting resistance could be just a pullback, could materialize into a larger correction. Long story is you want to be a little bit nimble on the way down, okay? Pooja saying monthly S1 is at 65.14 on Kiwi. Let me go back to that real quick. Where's that? 65.14. 65.14. So you have the 200-day moving average and the monthly S1, huh? Okay. Okay. Let's see. Let's see how that holds. Thanks, Pooja. Keep sharing. I love the more technical factors we have to line up together, the better. So for gold, that's my basic premise, guys. Is your Eman, for you on this short, you're in the weekly opening range. Look for a break for clarity. At the end of the day, anything is against. I wouldn't even use the weekly high. I would just use the high. I mean, the weekly high we made on Sunday is kind of the problem. I would just work with 1586 still as sort of your resistance barrier. Just to remind you guys how important that level is. Here's gold on the weekly chart. Huge, huge technical significance of this level. It's the record high we made in gold. Massive. All right. Now you're going to continue to see a lot of headlines telling you that it's based. I mean, it's not false, but there's going to be a lot of headlines based that the gold move is purely on uh, the coronavirus. Listen, obviously risk off fears and risk off concerns, and specifically when markets turn over on broader higher yielding risk assets, yeah, gold will find a bid. And you're finding that materialize a little bit because you're seeing that even, I mean, you can see here, I was looking at a chart of TNX earlier. Here are the yields on the US Treasury now on the 10-year, right? Tanked, which means prices going up, right? Which means people are seeking the relative safety um, of yields. We talked about this chart. It's funny thing is I haven't even an intern was asking me about this yesterday. I haven't even updated this in a couple of months, but I remember we were talking about this in the webinar here on SB back when we were breaking July, that decade almost upslope, 2012 lows, 2016 lows, right? Median line break or parallel break, resistance, lower support on the lower parallel. That held for month and a half, break, complete tumble, right? Complete breakdown. So even this near-term slope broke. Look, the low week reversal, outside weekly reversal from last year comes in at 155. That's another what, 7 basis points to the downside, but you get the picture, right? So if this is going to materialize, yes, gold will tend to find a bid. That said, this is still massive long-term Fibonacci lateral resistance. So 1586, it's all about that level. Very high volume hour on gold futures at 1570, my near-term bullish inval, I think, says Puja. 1569.60. Beautiful. Yeah, I mean, for sure. I love it. I mean, you have 1569, we have 1568. That's that former swing high from, and the breakout origin. Love it. And if you take a look at this again, just kind of objectively, that converges on slope for the former downslope that we've been following, right? So here's that downslope that we were following last week. Here's the breach and the accelerated rally into resistance. Just lower is going to be that slope. Something to take note of. And that is gold. Last but not least, number 7. Oh, what am I saying? 8, 9, this is going to be 10. Crude. So we threw this chart together, and I just wanted to show you how things have been panning out. Here's the daily chart. Well, let me just take the weekly chart first. Here's the weekly chart in crude. Talked about this yesterday. I just want to highlight again, major key support, 59 to 51.60. That's that $1 range has caught the last lows for the last 4 attempts at a break below this threshold. So right off the bat, objectively, not Mike Boutros' opinion, not Jamie's opinion, not anyone's opinion. Fact, here are all those swing lows in that key region. On a weekly basis, that's your sweet spot. Daily chart looks like this. We talked about that yesterday. Here was the median line for this pitchfork. We don't have much conviction on this yet because we don't have too many plays off the parallels, but the initial touch of that 75% line was pretty good. There's the median line. Talked about 2 ranges, right? Yesterday, 52.29 and 51.34 into 51.67, that 30-some pip zone right there. My favorite confluences, 100 off the high, 618 off the low, right? Right there, just lower. So I think you can kind of get lower still on a daily close basis. If we close below the median line, like basically right here, I would still keep the focus down on 51.34, 51.67. Near-term resistance, I have 54.11 on there for a soft resistance for a reason. It's actually the open, guys, for November and October. The October open was just pips off there. I remember because that month, that 2-month span, we had overlapping monthly opens essentially. Well, the 786 retracement of the advances there as well. So I kind of just leave that zone there to watch as resistance, 54.11. But really the bigger touch would be 54.84 for near-term bearish inval. So let me drop that down to here. Michael, what time are your daily posts updated on the website? Thanks so much. Hey, Patrick, I usually try to get them up. Typically, they get up by 6 or 7 p.m. I'm trying a new schedule as of late, so I've been trying to get them up more earlier at 5 or 6 here in New York time. I try to get it, Patrick, so that you have it at the Asia Open, because we have a lot of clients in Australia as well and all over the world. So before the trading day starts, I try to make sure that all the markets are updated. So sorry for late asking about euro, but are we still in the December range? Iman's asking. Patrick says, great, thanks again. Hey, you're more than welcome. Pooja, I'm sorry, Iman, what was that? Sorry for asking. Are we still in the December range for the euro? Yeah, we barely are. We're at the December low right now. So we never had a December opening range per se. I actually was looking at this. I remember I was talking to you guys about this. I thought this was an opening range break at first, but then when we ducked under, kind of got faked out. It was, because we ended up closing the month at the high. This month, if you count this as an opening range break to the downside, then we should be looking for a late month low. Here's your low from December. Well, there's your low from December, is right at the 110 handle, 110.3. Eman says 110, thank you. So we're in the December range right now, yeah. So anyway, I digress. For crude, here's the intraday chart. And here's what we've been following. Or here's the update from yesterday with crude prices. So low day close, 52.29 was holding support. I told you guys, look for initial resistance at the lower parallel. We just tagged it, okay? Now, if this is gonna, how do I say this in a way that makes sense? If this is gonna hold, let me take a step back. The bigger risk, as I told you, is the 618-100 confluence. That's 51.34, 51.67. So the idea was, this is a big break of downslope support. You should be looking for a drop into this region. Let's look for a bigger play there. First soft target of 52.29 held. Here's the bounce. I still think the risk is for a washout here. Now, near-term resistance is 54.24, followed by 54.84. Okay, that would basically fill the gap. And this is our bearish inval. So we wouldn't want price getting above 55.95 max. Ideal scenario, if this breaks higher, you look for failure off one of these two for the last dump into this zone. That's kind of what I'm thinking here with crude. Now, if the broader turn that we're kind of looking at happens, and you see dollar hold resistance, you see gold hold resistance, you see euro hold support, you see Aussie hold support, right? And you see sort of resumption back, or at least stabilization in equity markets. This could it could rip through 54.80, and then that downside target would be nullified. That being said, that's my ideal scenario. It's still a dump into 51.34, 51.67. And if this bounce is going to be bigger, well, let me take a step back. 52.29 is the low day close. It is a level that we've been looking at. But man, that 51.34, 51.67 still has me. You know how I love those confluence regions. Still has me looking for that last dump. Euro Swiss, who is that for? Eman, was that you? Why is everyone interested in this right now? I had a couple of people asking about this in the webinar yesterday. So you have an outside day reversal off the lows. Cool. That's always something worth taking a look at. It's the daily chart. E-Man says yes, because I think it's going to give a move soon. Based on what, E-Man? That's a fundy, a type of idea that you have, or just based on this drop to fresh multi-year lows? What's making you? What here turns you on exactly? Because I don't see it. Well, let me finish here. Let's see what's going on. Looks like it's trading in a channel. Could be. It's the first thing I kind of look for. Okay, just to get the broader sort of look of things here from last year's open. Let's see if there's any play off this. So if this pitchfork is in play, that puts you at the lower parallel right now. Hmm. Oh, it's not quite an outside day reversal yet, but it's trying. Possible momentum trigger break. Watch this today into the close of US trade. Still an oversold, so it's going to be a weak trigger until you get above 30, but a trigger nonetheless. That'd be Euro strength, Swissy weakness, huh? So even on a tighter time scale, so that's where, the intraday charts really will be more beneficial for you. No doubt about it. It's flashing like a classic exhaustion trade here. Sorry to take you back to 129.60 on sterling. Sent you my chart. Pooja, I'll take a look in just a moment. Eman, definitely look, it's got all the hallmarks on it. So if you look at this just from a objective standpoint, you have ongoing divergence into the lows, price action with a lower low, oscillator with a higher low. Both of the reference points getting closer to 50, right? So it actually tends to be a decent signal. If today materializes to be an outside day reversal off this low, that is also sort of screaming exhaustion. Now, trying to get targets on this is going to be the tricky part. But just a basic retrace, and then one other thing I do. One other thing I would do on this trade is once we get a higher low, see if you can get any type of formation for slope. You know what I mean? Like some sort of pitchfork or some sort of gradient that'll help us narrow down what targets should be looked at when. And that's the thing that we look for, is that a lot of times it'll give you a really good indication on the time value of what the level looks like. So right now, 75.20s, I'm sorry, 107.50s rather, is what we'll be looking for as far as like the first level of major resistance. You got the channel there, a basic 236. We don't know that this is a low, but based on the momentum profile, based on the daily chart, based on where we are on slope, if this breaks a new high, that would be sort of the first level you'd look for. You guys know my feeling on Euro Swiss. Eman, Eman, I hope that helps give you some clarity. The next lateral level of downside support I'd be looking for if it breaks 106.30s. But yeah, if it's going to turn from a slope standpoint, from a gradient standpoint, this would be sort of the first spot you want to look. Sure, I'm with you on that. Watching if it moves back to exactly 107.50 or 108 to resell. If it gets to 108, be careful. If it gets that high, you might be in for something of a bigger recovery just because of where we are in slope. So I don't know if I'm with you on the 108. 107.50 would be a spot I'd be looking for. Pooja says, sorry to take you back. 129.68 in sterling. Sent you my chart. Where did you send it, Pooja? On Twitter? Okay. $129.68. 129.68 sterling. Let's see. Is that the extension? The 618 extension? Look. I don't have anything there, no. So the 618 extension, it would be more, how do I say this in a way that makes sense? This is the 618 extension I'm paying attention to. Let me just to tell you what I'm looking at. Just thinking if it's a triangle. Could be, yeah, could be. I'm not going to take it away from you. That might be the play. But for me, the larger 618 extension that I'll pay attention to is actually the one off the yearly high from last year, and that's down here at 129. Could 129.60 give you a little rebound? Sure, you have some former swing lows down there. I wouldn't say it's not a level, but for me, in my mind, if this is a true break of the upslope, if this upslope is truly breaking, I mean, this is a conservative target. So look, let's say this: if you're in a short 29.60, I'd peel some off, just on account of the swing lows alone. Forget the fact that it's the 618 extension. But I still think the bigger move here, if we drop 29.90, is for a 29 drop right here. I don't like that RSI is below 30, looking long. Hey, remember, Pooja, I don't need to tell you, you've been doing this long enough. Remember that the risk for that mentality. Things can stay in oversold for hours, days, weeks. That's not a reason necessarily to try to buy it or play the rebound. So look for the recovery back from oversold. That's sort of your signal, right? And even then, it might still make another low, but that's the signal from a momentum standpoint. This can stay in overbought for multiple days, oversold for multiple days if it wanted to. So, oh, I think I read that wrong, Pooja. She said, I'm looking long, but I don't like that it's below 30. There you go. I'm sorry. It's coming towards the end of the session. So, yes, I'm with you on that. SPXP looks like this. Man, I just want to show you the chart. I tweeted this yesterday. Here's what it looks like. This is the same pitchfork we've been working with since September, I think, of last year. Nothing's changed. Upper parallel held resistance like a charm. It broke back below. If you guys remember, this is the 75% line, if I'm not mistaken. Oh, this is actually a parallel, just extending off these highs. So parallel the same slope extending off the highs that made in July of 2019. Resistance, break, acceleration, outside day reversal off the upper parallel, took you back below that slope. I still think, and this is what I was saying earlier in the session, I still think that you could still get a deeper cut before you look for resumption. And that's not just based on the fact that I don't have any like major targets here. Even if you take basic, you could look at something like that and be like, oh, well, Mike, it didn't technically close below that slope. And in fact, if you look at it at a closed basis, it rebounded right off of it. So there's arguments on both sides. and this is why the broader like risk off asset thing I'm looking at right now, I don't know if it's necessarily done, which is what concerns me a little bit with the dollar. So if you get the washout lower, Pete, the monthly or the yearly open comes in at 30.19 on SPX. Basic 236 to the advance off the lows that we made back in August gives you 32.03. So maybe a little bit deeper of a cut. Another, what? Sort of move like that. I'm trying to get the measurement tool out, but it's not letting me do it. Another 1.7%, wouldn't be, if for me, wouldn't be like, oh my gosh, we're going to reset. It would be just, yeah, we're pulling its support, uptrend support, former channel resistance. We rebounded off it back here earlier in the month. Still wouldn't be outside the realm of possibility. You know what I mean? But for me, resistance is going to be at two different areas. The high day, which is the outside reversal day close here, okay? And then the parallel, just higher. So you're looking at like 32.93 to like 33. That's your resistance zone. If we get through that, you're looking for that completion to the 100%, which is 33.53. We just turned ahead of that. Make sense? He says, thanks. You're more than welcome, Pete. All right. Well, that covers my end today. If you have any other questions or trade setups, feel free to throw them on the message board. If not, we'll go ahead and wrap things up. Look out tomorrow, okay? The interest rate decision is essentially baked in the cake. We want to see with a commentary by Jerome Powell, and specifically in light of this new coronavirus outbreak, what impact that might have on Fed outlook, or what impact that may have on growth prospects moving forward. If the Fed is looking at that as sort of a X factor. Listen, if the Fed shows concern about that topic tomorrow, you better bet that the market's going to react, and they'll react in kind. If the Fed kind of shrugs it off and says it's something we're tracking, but it should be rather limited, blah blah blah, and it kind of plays it off, I think you're right back to the horses again. All right, guys, best of luck trading. I will see you Thursday morning, and till then, stay nimble. All right, heading into the FOMC, things are going to start lighting up tomorrow or tonight rather, with liquidity kind of drying up. So stay nimble and keep the powder dry heading into FOMC. I will see you guys on Thursday. Cheers.